日本卫浴领导品牌 Total Newest 一体型除菌全自动马桶，以前瞻科技与极致美学，从无微不至的自动功能到无可取代的温柔水洗，让日常化为非凡，将奢华全新升华，打造舒心且健康的生活。享受 Total Newest 的尽善尽美，让每次使用都是洁净与设计美学的顶级如厕享受。即日起至8月31日，购买指定 Total Newest 全自动马桶机型，享8折优惠，再享5000元折扣。更多资讯请见节目资讯栏连结。
Welcome back to Sip&Talk. I'm Sunny.
I'm Joe.
And today's topic is a global news roundup.
Great to be here.
Things happening out there.
It really does. We're seeing some significant global economic shifts, definitely some cutting-edge tech developments, and also, unfortunately, a really serious social crisis unfolding. It's quite a range.
Yeah, and that's exactly why we do these deep dives. The interesting thing, looking at it all together, is how you start seeing the connections, between topics that seem totally separate at first glance.
Exactly.
So our mission here is basically to unpack the key takeaways from everything you shared, maybe connect a few of those dots, and hopefully help you navigate all this information with a bit more, clarity.
Sounds good. Let's jump right in.
Okay, let's get into it then. Starting with the big picture, global economics, trade winds. We've seen some interesting currency stuff lately, haven't we? Like the euro, kind of unexpectedly, showing some muscle against the dollar. What's the thinking on that?
Yeah, that's definitely caught some attention. The material really points towards the European Central Bank's monetary policy decisions as a key factor. And there's also this ongoing discussion about the possibility of EU countries pooling debt, through joint bonds.
Joint bonds. Saw that too. That could be a big deal for countries with pretty heavy debt loads, right? Like France is around, 112% of GDP, Italy near 140%, Spain over 100% too. Could really take some pressure off if it happens.
It absolutely could. But as the analysis suggests, it's politically really complex to actually pull off. And even with the euro looking a bit stronger recently, the U.S. dollar market is still, dominant globally.
Right.
It's just massive, incredibly liquid, super easy to trade in. So it remains the sort of default currency for a lot of international finance.
So investors aren't exactly fleeing the dollar then, despite the euro's bounce?
Not really, no.
Right.
The info suggests maybe some investors are taking a closer look at European corporate bonds. Why? Because they might offer slightly better returns, maybe like 0.5% to 1% more than similar U.S. bonds. But making a huge shift out of the dollar market, that's tough just because of its sheer size and how central it is. Definitely need to keep an eye on those EU meetings and what the ECB does next. That's highlighted as pretty crucial.
Okay, got it. Let's shift gears a bit to trade talks. The UK and China are talking again, and it sounds like it's moved beyond just, arguing about tariffs on everyday goods. Now it's about really critical stuff like chips and rare earth materials. Why are those suddenly so central?
Well, this is where things get really strategic in terms of global supply chains. Rare earth materials are just fundamental. They're in practically everything now. Smartphones, EVs, green tech, you name it.
Right.
And the situation is China controls something like 80% of the global supply.
80%? Wow, that's huge dependency.
It really is. The data show the UK, for instance, imported about 65% of its rare earths from China back in 2024. Now, there are some recent, maybe tentative signs China might increase exports. One estimate mentioned a potential 10% growth in Q1 2025. But the long-term supply security, that's still a big question mark. So locking down access to these materials is understandably a top priority in these talks.
And all this is happening with, wider geopolitical stuff swirling around, isn't it? President Trump's administration is very active globally, and you hear proposals like a potential 25% tariff on chips from Taiwan. That could send massive shockwaves through supply chains and costs, surely.
Oh, absolutely. You can't separate these talks from that broader geopolitical tension. The UK-China discussions have to navigate this really sensitive landscape, especially with existing U.S. restrictions on exporting certain tech to China.
Yeah.
We saw how those restrictions, like on NVIDIA's H20 chips, were estimated to cost the company somewhere between, $4.5 and $8 billion in just the first quarter of 2025.
Wow.
So yeah, the UK is essentially trying to secure its own tech supply lines while walking this tightrope between major global powers. It's complicated.
Sounds incredibly tricky. Slow progress, maybe.
Yeah, the material suggests significant breakthroughs might take time. It's a delicate balance. And just quickly on another trade point mentioned, the EU seems close to an agreement with China on setting a minimum price for Chinese EVs coming into Europe.
Ah, right. To protect their own car maker?
Exactly. It's an effort to shield European manufacturers and maybe head off imposing higher tariffs down the line. Chinese EVs already grabbed about 12% of the European market in 2024, so they're definitely making their presence felt.
Okay. So from global trade complexities, let's pivot to the tech frontier. UK Tech Week sounded like it was buzzing, especially around artificial intelligence.
AI was definitely the star of the show, it seems. The big headline was the UK partnering up with NVIDIA. The plans laid out are pretty ambitious, setting up AI labs, aiming to train like 7.5 million people by 2030, and pumping £1 billion into computing power to back it all up.
That's a serious investment in building AI muscle.
It is. But what the information also highlighted is, while the UK has great talent and solid venture capital, it still struggles with infrastructure and getting those really big funding rounds. Lots of promising AI startups end up listing in the US.
Right.
So there's a push to boost UK tech IPOs maybe by 20% by 2027. They're really framing AI as this transformative force, like a new kind of electricity, something that could add maybe 5 to 7% to the UK's GDP by 2030.
New kind of electricity. I like that. It captures the potential. Speaking of the cutting edge, Computex 2025 also featured heavily. What were the main themes coming out of there?
Computex gave a good glimpse into where AI hardware and applications are headed. Two big ideas really seem to stand out.
Okay.
First, on-device AI. So instead of all the AI processing happening in massive data centers far away, it's about building that capability right into your device, your camera, phone, whatever.
Makes sense.
The advantages. It's faster, potentially up to 30% faster, because the data doesn't have to travel back and forth to the cloud. And for some things like security cameras, maybe it could actually be cheaper to run, perhaps 20% less in operational costs. It's kind of a reaction against older products that struggled because they needed that constant cloud connection.
Okay, so processing closer to the user faster, maybe more reliable. What was the second big theme?
The second one was specialized AI agents. Think of these less like general-purpose chatbots trying to do everything, and more like highly focused AI tools built for one specific job.
Ah, okay. Like tools for specific tasks.
Exactly. And the examples show they can seriously boost productivity. Like imagine an AI agent designed just to help a live streamer. It could manage the chat, handle technical stuff, juggle multiple things at once. The potential efficiency gain mentioned was cutting the human labor needed for those specific tasks by as much as 50%.
50%. Wow, that's a huge jump in efficiency.
It really is. And this push towards specialized automation is spilling over into robotics too. The information mentioned specialized robots, like automated coffee arms or cleaning bots, are becoming more common. Costs are coming down to be 15% lower in 2024, and they're getting more reliable. That market's expected to grow around 20% in 2025. It shows AI moving into the physical world.
And underpinning all this tech, of course, are semiconductors. What's the general outlook for the chip market?
Still looking strong based on the data we reviewed. Global chip sales hit $627 billion in 2024. That's up almost 20% from the year before.
Impressive.
And the forecast for 2025 still growing. Expected to climb another 11% to nearly $700 billion. The big drivers are things like generative AI, obviously, but also the continued rollout of 5G and the accelerating shift to electric vehicles.
So a booming market, but I guess there are still risks involved.
Oh, absolutely. The material is very clear on that. Alongside the growth potential, you've got significant hurdles. That proposed 25% tariff on chips made in Taiwan. That could directly bump up costs for big players like NVIDIA and Broadcom by maybe 10–15%.
Ouch.
And geopolitical instability is just a constant background noise. We saw earlier how that investigation by China into NVIDIA contributed to those pretty hefty estimated losses for the company in early 2025.
Right. So huge opportunities, but definitely need to keep your eyes wide open about the challenges. Thinking about that, what specific investment angles in tech did the material point towards?
It highlighted a few key companies. NVIDIA obviously stands out for its massive growth potential, especially dominating the AI training chip space with huge data center growth. The main cautions there are its pretty high valuation and that tariff risk we just mentioned.
Okay.
Then there's Broadcom. It's presented as maybe offering steadier growth. They're strong in AI chips and software, plus the VMware acquisition added some diversity.
Yeah.
But a key point noted is their heavy reliance on Apple for revenue, something like 41%.
41%. Yeah, that's significant. And TSMC, the manufacturer.
Right, TSMC. They're the undisputed world leader in actually making the chips. They've got really aggressive expansion plans. And the analysis suggested its current valuation might make it sort of the potential value play compared to others.
Right.
But yeah, you can't talk about TSMC without addressing the huge geopolitical risk hanging over Taiwan. It's unavoidable.
Makes sense. So those are individual stocks, but the material also compared two big tech ETFs, XLK and QQQ. For someone wanting broader exposure, what was the takeaway there?
Yeah, that's a practical angle for investors. The
Yeah.
XOK, that's the Technology Select Sector SPDR fund, was described as being more of a pure play tech fund. It's heavily weighted towards AI software and cloud companies, maybe 40–50% of its portfolio.
Okay.
It also generally has lower fees. The comparison showed it was noticeably cheaper than QQQ over 5 years for the same investment. And it's often seen as having slightly lower risk, a lower beta. The flip side is it misses out on some giant tech-adjacent companies like Alphabet and Meta because they aren't strictly classified as technology under its specific rules.
Gotcha. And the QQQ, the Invesco QQQ Trust.
So QQQ gives you broader exposure because it tracks the NASDAQ 100 index. That means it captures a wider range of AI applications, including companies involved in generative AI and robotics that XLK might not hold.
Right.
It's known for being very liquid, easy to trade, and it spreads across tech, communications, consumer discretionary sectors. The downsides: higher fees compared to XLK, and it's generally considered higher risk with a higher beta. Plus, you're exposed to risks from those non-pure tech parts, like Meta's reliance on ad revenue, for example.
Okay, so it sounds like the distinction is if you want that laser focus on core AI software and cloud, and you prioritize lower costs and maybe lower risk, XLK is the direction pointed out. But if you want that wider net across the broader AI ecosystem, including things like generative AI and robotics, QQQ could be a better fit, even with the higher costs and risk.
That's pretty much the summary presented. There was even a suggestion for potentially combining them for a balanced approach, like maybe 80% in XLK for that core lower cost exposure, and then adding 20% in QQQ to capture that broader range of AI applications.
That's really useful context for understanding those different approaches. And obviously, the standard but crucial disclaimer applies.
Yeah.
This is all based on the information provided. It's not financial advice.
Absolutely essential reminder. Always talk to a qualified financial professional. Make sure you're looking at the very latest data. I mean, the projections for the overall AI market are just enormous, potentially hitting $2 trillion by 2030 with really high annual growth. But remembering those risks, tariffs, fragile supply chains, fierce competition is just critical. Diversification was definitely underlined as key.
Okay, now we need to shift gears pretty dramatically here. The materials also covered a very different and extremely serious domestic issue. The fentanyl crisis in the U.S., based on the reporting, it sounds absolutely devastating.
It is, and the information paints a really, really grim picture. Fentanyl, fundamentally, it's a synthetic opioid, a powerful painkiller used legitimately in hospitals. But on the street, it's become this terrifyingly potent drug.
Potent is almost an understatement, isn't it?
It really is. The sheer strength is hard to grasp. We're talking about 2 milligrams. That's roughly the size of maybe 2 grains of salt being enough to be lethal.
2 milligrams.
Yeah.
That's staggering. And the statistics reported are just heartbreaking. Over 300,000 deaths in the U.S. linked to fentanyl just since 2019. That number, just that number alone, is more than all U.S. military deaths in the entire Vietnam War.
Yeah.
And nearly 80,000 deaths in 2023 alone.
The human cost is almost unimaginable, and the economic fallout is massive too. The materials cited an estimated cost of $2.7 trillion in just 2023. That's nearly 10% of the entire U.S. GDP. It described these awful scenes of people overdosing in public. Sometimes in that state, people call the fentanyl bend, almost like zombie-like.
And it's not just people seeking out fentanyl who are at risk, right? That was a key point.
No, absolutely not. And that's one of the most insidious parts highlighted. Because fentanyl is so cheap to make and so incredibly potent, it's routinely mixed into other street drugs. Heroin, cocaine, methamphetamine, often completely without the user even knowing.
Right.
It's also being pressed into pills designed to look exactly like legitimate prescription pills, like oxycodone M30s, or even disguised as candy sometimes. So you have people dying from accidental overdoses who had no idea they were taking fentanyl. They thought they were buying something else entirely off the street.
And the reason it's being mixed in so much is just pure economics.
Pretty much, yes. It's incredibly cheap for criminal organizations to synthesize compared to, say, cultivating heroin poppies. And because it's so potent, a tiny amount goes a long way, which means massive profit margins for dealers. That financial incentive is a huge driver of its spread.
So how does it actually get into the country? The material described this as a really sophisticated, almost industrialized, transnational operation.
Yeah, it's way beyond just traditional drug smuggling at this point. It's a complex, multi-stage process, as detailed in the reporting.
The precursor chemicals, the basic ingredients you need to make fentanyl, primarily come from companies in China. A U.S. Congress report was cited saying something like 97% of illegal precursors intercepted originated there. The U.S. has been pushing China to crack down on these exports.
Okay.
Step 2. These chemicals are then shipped mostly to Mexico. There, criminal cartels have set up pretty sophisticated labs to actually manufacture and process the finished fentanyl powder.
And then step 3.
Step 3. Smuggling it into the U.S. and Canada. The methods are incredibly diverse, hidden in vehicles, inside tires, but a huge volume comes through small packages. Billions of small packages enter the country every day through mail and courier services, and hiding small amounts of potent fentanyl in them makes detection extremely difficult. There's also mention of microlabs being set up closer to the U.S. border to do the final processing steps, which cuts down costs and risks for the smugglers.
And with all that product moving, there must be vast amounts of money involved. How is that laundered?
The reporting outlined a really common method involving Chinese underground finance networks operating right here in the U.S. Basically, they take the U.S. dollars earned from fentanyl sales.
Right.
Then they act like an informal money transfer service. They lend those U.S. dollars to Chinese nationals living in the U.S. who need cash locally. In exchange, those individuals arrange for the equivalent amount in Chinese yuan to be deposited into bank accounts back in China.
Ah, so the drug money never physically leaves the U.S., but the value gets transferred.
Exactly. The criminal groups then access that yuan in China, use it to buy more precursor chemicals, and the whole cycle starts again. It effectively cleans the money. Other methods mentioned included things like trade-based laundering, using things like smuggled timber or wildlife, and increasingly, the use of cryptocurrency.
It just sounds like this massive, deeply rooted global machine with just devastating consequences here. What's being done to fight it?
Well, the U.S. government has definitely taken steps. Fentanyl has been classified as a top-tier controlled substance, Schedule 1, and there's been a big increase in seizing the drug and precursors at the border.
That's not enough.
The material really emphasizes that just stopping it at the border isn't sufficient. It requires a much broader strategy. You have to target the entire supply chain from those precursor chemicals in China to the manufacturing hubs in Mexico. But equally important is tackling the demand side here at home. That means providing comprehensive social and psychological support for people struggling with addiction and massively expanding access to mental health services and treatment programs.
Is recovery actually possible with something as powerful as fentanyl?
Yes. The information is clear on this. Recovery is absolutely possible. There are treatment centers across the country helping millions of people. The reporting gave examples, like in San Francisco, showing how longer-term treatment programs combining counseling, medication-assisted treatments like methadone or buprenorphine, and strong support networks can genuinely help people break free and rebuild their lives.
That's good to hear amidst all this darkness.
It is. But sadly, the stigma surrounding addiction is still a huge barrier. Too many people die before they feel able or have the chance to access that help. What's really stressed is that this is a crisis operating at the level of national security.
Yeah.
And while apparently 2024 saw a slight decrease in overdose deaths, which is encouraging, it suggests the help programs are working. The underlying trafficking network is still incredibly active and adaptable. The warning is stark. This isn't just a U.S. problem anymore, and if that network isn't dismantled, fentanyl could easily spread much more widely to other countries.
Wow. Okay. That's incredibly sobering, but really crucial information to grasp. So we've covered a huge amount in this deep dive, from the macro currents of global finance and trade to the absolute cutting edge of AI and investment potential, and then confronting this incredibly real, incredibly tragic human cost of the fentanyl crisis.
And seeing it all laid out like this really does underscore how interconnected everything is, doesn't it? Global supply chains, tech innovation, geopolitics, deeply personal social issues, they're all tangled together, influencing each other in ways we might not always see at first.
Yeah, absolutely. Our goal here was really just to pull out the most significant insights from the material you shared, hopefully giving you a clearer map of this really complex landscape.
Right, and maybe leave you with something to think about.
So here's a final thought to mull over. Consider how the very same intricate global supply chains, the ones designed for incredible efficiency to deliver our latest gadgets or move goods for international commerce, can also be exploited to facilitate something as devastating as the fentanyl epidemic. What does that paradox, that inherent duality, tell us about the complex, interconnected world we live in today? And perhaps more importantly, where might the most critical points for intervention truly lie? Something to consider. I just want to give another shout out to Micky from Mickytolife. His channel is a treasure trove of inspiration, and he's a huge Sip&Talk fan.
Absolutely. Make sure to check him out and maybe even share your awesome podcast intro with him once you've created it.